Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your losses and keep more of your profits through our proprietary market signals that are emailed to you every weekend. Today we will be doing technical analysis on the S&P 500 for Monday, March 16th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I pay for, and I will leave a link to their site in the description box below this video. What a bloodbath it was in the stock market today. We were down 11.98% on the S&P 500 and closed at 2,386.13. And what we're looking at here is a 3-day chart where each vertical bar, each candlestick, is a 5-minute trading period in the S&P 500. And as you can see here, we closed right at the lows of the session. And I just wanted to point out that on Friday, I had warned everybody to not take this, 25-minute period here where we rallied into the close and closed above that 27.10 level, technically by 0.07%, pulling ourselves out of a bear market. At that point, we were only down 19.93% as of the close of the market on Friday from where we closed on February 19th at 33.8615. So obviously a little tongue-in-cheek humor there, but I told everybody not to read too much into this and that there's no way that was the end of the downturn. And I was more right than I wanted to be. Today was an absolutely brutal day. And when we take a look at just today, so what we're looking at here is a 1-day chart where each vertical bar, each candlestick represents 1 minute of trading. And as you can see here, we opened up and there's no volume here because the circuit breakers kicked in for 15 minutes, stopping, halting, trading in the S&P 500 and the indexes. And when trading opened up, then you can see that we had a little bit of a rally. And then you can see that we peaked at around 11:20 in the morning, and then we backslid all day and closed right at the lows of the session. Again, closing at 23.8613, down 11.98% for just today. Now, when we look at a longer-term chart, and what we're looking at here is a 3.5-year chart where each candlestick represents 1 week of trading in the S&P 500. Any of you that have been watching my work for a little while, you know that I've been telling you that I expected us to get down to this 2350 level, and at this point we're 36 points away from it. So I would anticipate that within the next day or so, we probably will get down to this 2350 level, which is where we began this rally that started at the end of 2018. So that's the area we bounced off of, right around that 2350 level in Q4 of 18. It might provide some support. And you can see there was a little trading back in 2017, back in March and April, around that 2350 level. So we might find a little support there, and we might even see a little bit of a bounce in the markets tomorrow, because when you get these huge down days, oftentimes you'll get a little bit of a recoil, a snapback the next day. So don't be surprised if we get, and it may not happen, I don't know, right? But it's not unusual when you get these huge down days like this to get a little bit of a snapback, a relief rally the next day. But again, guys, there's no way that this is the end, okay? There's just too much bad news. There's too many companies that have had to close, events that are being canceled, sports teams can't play. I mean, this is unprecedented. So just understand it's going to get worse in the stock market before it gets better, okay? It would take a miracle at this point for that not to be the case. Now, when we pull back and look at an even longer term chart, now we're looking at a 7-year chart where each candlestick is 1 week. So time frame 7 years, and again, the candles represent 1 week of trading in the S&P 500. You can see how rapidly we've fallen from that 33.8615 level, which we closed at, our all-time closing high so far in the S&P ever, 33.8615 back on February 19th, so not even a month ago. And here we are into a bear market, and deep into a bear market at this point, and we're down here pretty close to this 2350 level. Now, once we penetrate that 2350 to the downside, what we should anticipate is that we're going to end up somewhere down in here around 2,000 on the S&P 500, plus or minus about 125 points. You'll see that there's a lot of trading for about a year and a half, going clear back to 2014 through 2015, and then into, say, the first half of 2016 before we finally broke out of 2100 to the upside. We broke out and then pulled back and checked the top of this area, that is very normal, right? You get a check back and then you get the real rally. So once we hit down into this level, then it should provide some technical support for us down here. But guys, there's nothing saying that the decline in the market couldn't get worse than this, okay? But at least this area, there's a lot of trading here, and you know, we should find some support down in that area. But again, it doesn't mean it's over, okay? And from where we closed today, Monday the 16th, at 2386.13, a drop down to 2,000 would be another 16.18% drop, okay? So we probably have at least another 16% to go before this is over. And again, there's nothing saying it can't get a lot worse than that, but I think we should prepare ourselves for at least another 16% downside. That would put us down to this thick support area, and hopefully that will be enough to support us. But guys, again, I've been playing around with some numbers, some fundamental analysis, looking at potential earnings situations for the year 2020 for the composite shares on the S&P 500, and then running different PE scenarios on it. And it could definitely, this could get a lot worse before it gets better. So protect yourself. And again, I want to encourage you to take a serious look at simple market signals, because it will help you. And I'm going to tee up a little bit more information right now on simple market signals, because I want you to understand how much this can help you. Now, let me give you a really quick overview of what simple market signals can do for you. How would you have liked to had a clear signal to get out of the market back in 2000, right here at around the 1450 level on the S&P 500, and then stay out of the market for the bulk of the downturn, and then have a clear signal to re-enter the market right here, which is around that 900 level on the S&P 500 in 2003. So again, you could have had a clear signal to get out there at around 1450. You'd have been out of the market for the bulk of this downturn, re-enter the market right around here at 900. That's back in 2000 through 03. Now, let's go to 2007 through 2009. Same thing. Clear signal to get out of the market back in 2007 at around the 1500 level. You would have been able to get back in the market. Clear signal given right here at around 875 on the S&P 500, and you would have missed the bulk of this downturn. Okay, now let's fast forward to 2018. I'm just giving you a quick overview of how this works, guys, and what you're missing by not being a subscriber. All right, 2018, another real bad year in the markets. You could have been invested in these green periods, okay? The way I do it and the way I designed it for myself, I'm invested on the green periods. I'm in cash during the yellows and reds. So let's just look at these two green periods. There was a couple, but let's just look at these two green periods in 2018 real quickly. You could have been invested here, got out right here, set out this period, and then you could have got back in here and been invested during this time frame, got out here. The market was negative, almost 5%, including the dividends being reinvested back in 2018, and you could have had a profit using simple market signals by only being invested about 4.5 months of the year, okay? So that's just a real quick overview of what simple market signals can do for you guys. So please take a deeper dive and take a look at some of the videos that I'm going to queue up for you here in just a second. All right, so now we're obviously out of my YouTube channel, the Rodney E. Constable Success Channel, and a few of the videos that you're going to want to watch if you want to find out more about simple market signals. If you want to spend more time just on the charts like I just showed you, you can dig into these videos here. So the S&P 500 2000 through 03 using simple market signals. That'll walk you through some of those charts and drill down a little bit further on what I just showed you. 2007 through 09 time frame, same thing. S&P 500 07 through 09 using simple market signals, and then 2018 using simple market signals. So it just gives you a little bit more context around those charts I just showed you. If you want to learn even more and you want a more in-depth explanation, introducing simple market signals, which is about a half-an-hour video that digs into the system itself. So that is a really good video, about a half an hour. And then if you want the whole story, including my background, and you want a ton of great information, and you want the whole story, the Successful Investor webinar, which is about an hour long, guys, you really need to invest some time in understanding how powerful this system is, okay? I developed it for myself. I'm sharing it with you for less than $20 a month. And I'm telling you guys, it works. So go out to the YouTube channel, check out these videos. I will also leave a link to those videos in the description box below this video, and I will also leave a link to the video of my financial services background. So if anybody's curious about my background and why you may or may not want to listen to me, this gets into my background in financial services, which is pretty extensive, including all my trading and everything. So that will also be in the description box below this video. And of course, if you haven't already done so, please subscribe to my YouTube channel, give me a thumbs up on this video, and I will see you in the next video.